right, well, while debt can impact your finances, it can also impact your taxes. Whether your debt was forgiven or you weren't paid back from a loan you provided, you still may have a tax impact. So joining us now is CPA Kimberly Washington. And first of all, tell us if the taxes or how those debts might be either taxable or forgiven if canceled.
Right. So if you're someone who's listening, maybe you had some loans forgiven in the last year, you may have to report it on your tax return. So you do want to keep that in mind. When it comes to, of course, taxable debt, it may be, of course, a situation that maybe that, of course, is less than what you owe and that third party has canceled that debt. The second thing is that you may be able to, of course, report it on your tax return, and you want to find some ways that you don't have to do that. You'll receive a Form 1099-C, which gives you information about the canceled debt. And last but certainly not least, there are some debts, of course, that could be excluded from the tax return. So that's some very important news concerning that.
And what types are those that would be excluded?
Right. So number one, of course, would be like forgiving debt when it comes to student loan debts. That you may not have to report it on your tax return. The second thing, if you were, of course, involved in a bankruptcy, you may not need to report that as well. And also some debts and loans that, as it relates to like a foreclosure, you may not be able or have to rather report that. You do want to visit the IRS.gov website so you can find out different examples of what you need to include or what you don't need to include at this time.
Okay, if somebody finds themselves in a situation where maybe they kind of have to pay taxes on that amount forgiven, what steps do they need to take?
That's this rule some people don't know about. It's called the insolvency rule. And this is a great tool that you can use, especially if you did receive a 1099-C. And the way that it works, of course, if you have more liabilities than assets, you can tell the IRS, hey, of course, I am insolvent, so I cannot afford to pay this tax debt. You can complete that information. There is a worksheet on IRS.gov website. Submit it along with your tax return and amount. You don't have to report on your tax return, so that's good news for those who may fall in that situation.
That would be good. So lastly, what are some other ways that debt can really impact our taxes?
The flip side too as well. If let's say for instance that you loan money to someone and they didn't pay you back, you may be able to deduct that on your tax return. A lot of people don't know about it. It's called the bad debt expense. So if you are in that situation, of course there's some different rules that goes with that, but you definitely want to do your research, learn a little bit more about it. But that could be a way, of course, if somebody owes you money, you may be able to deduct it on your tax return.
Yeah, we want all the money we can get. Owed, taxes, all of it. All right,
Yes.
Kimberly Washington DeVore, thank you so much.
Thank you.